Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money moves that shape our world by looking at the official documents. Today we have Exodus Movement Incorporated, a company that is in the business of digital currency, and they've just filed a current report with the SEC, and let's just say it is not what you might expect from a standard financial report. Before we start, if you appreciate getting straight insights from corporate documents like this, make sure you are subscribed. We also have a Discord community linked in the description below where we break down these filings and explore the financial markets together. So what is the big news here? Well, on the 17th of November 2025, the company Exodus Movement Incorporated took out a new loan. This isn't just any loan though, it is for a hefty $60 million. They're calling it the November 2025 loan. This loan is happening under something called a Master Digital Currency Loan Agreement with a lender named Galaxy Digital LLC. What is interesting is the loan itself is in US dollars, but it is secured by Bitcoin. Yes, you heard that right. They are pledging Bitcoin as collateral for this loan. Now let's talk about the terms. This loan has an interest rate of 9% per year. It is described as an evergreen facility, which essentially means it can keep going indefinitely as long as both parties are on board. There is a 30-day option for either party to end the agreement or for the company to return the collateral. Here is where it gets really interesting for collateral. The company has to pledge Bitcoin worth 150% of the loan amount. So for a $60 million loan, they need to put up collateral worth $90 million in Bitcoin. They also have to watch out for margin calls. If the value of the Bitcoin drops to 140% or even 135% of the loan amount, they'll have to put up more Bitcoin to maintain that collateral level. This is a pretty common feature in crypto-backed loans to protect the lender if the crypto market gets volatile. And where is this Bitcoin collateral stored? It is held by Anchorage Digital Bank. This means that Galaxy Digital LLC, the lender, can't just take that Bitcoin and lend it out again, which is good for Exodus. This also means if the price of Bitcoin falls significantly, Exodus might have to either provide more Bitcoin as collateral or potentially face the consequences. What happens if things go wrong? Like in any loan agreement, if Exodus defaults or the agreement is terminated, the lender has the right to take possession of or sell the collateral, which in this case is Bitcoin. So the value of their Bitcoin holdings directly impacts their ability to meet their loan obligations. This is a crucial point for understanding their financial strategy. Now, looking at this report, it is a Form 8K, a current report. These are typically filed to announce significant events that shareholders should know about. In this case, the significant event is the creation of this substantial debt obligation backed by cryptocurrency. It is worth noting that Exodus Movement Incorporated trades under the symbol XOD on the NYSE American LLC. This suggests they are a publicly traded company, and so these filings are indeed for investors and the public to see. The core of this filing is indeed about creating a direct financial obligation, that being the $60 million loan. They are using this loan to stay ready to deploy capital for potential future strategic transactions. This tells us they are planning to make some moves in the market, and this loan is a preparation for that. It is essentially saying they are putting themselves in a position to act quickly if an opportunity arises. One detail that stands out is that Exodus Movement Incorporated is classified as an emerging growth company. This status allows them certain exemptions and simplifications when complying with regulatory requirements. It signals that the company is still relatively new or small in the grand scheme of public companies. So what does it all mean? Exodus Movement Incorporated is borrowing a significant amount of money, $60 million to be exact. They are securing this loan with Bitcoin, a volatile digital asset. They are also willing to put up Bitcoin collateral at a higher value than the loan amount to protect the lender. This implies they are confident in their ability to manage the risk associated with Bitcoin's price swings, or they have a strong belief in a future increase in its value. The purpose is to be ready for acquisitions, mergers, or other strategic investments. This strategy is a double-edged sword. On one hand, it gives them financial flexibility to seize opportunities. On the other hand, it exposes them to the inherent risks of the cryptocurrency market. If Bitcoin's value plummets significantly, they could face margin calls and potentially lose their collateral. The fact that they are taking on this debt to fund future growth activities suggests a proactive but also potentially aggressive approach to expansion. For investors, this means keeping a close eye on both the company's strategic moves and the price movements of Bitcoin. Now, if you found this breakdown helpful and want us to keep decoding these financial documents, hit that like button. It really helps us out. And if you are not subscribed yet, make sure you click that subscribe button and the notification bell so you don't miss any of our upcoming videos. Don't forget to also join our Discord community linked in the description for more in-depth discussions about corporate finance and investing. Alright, that is our look at Exodus Movement Incorporated's latest filing. What is your take on this Bitcoin-backed loan and what it signals for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.